The latest line is this potential extension that ultimately should be a good signal if it bears fruit.
I think you phrased the question absolutely in the right direction, Manus, there, because you've had a steady drip feed now of positive comments out of the Trump administration from the president himself. Of course, we've had comments suggesting that he might be ready to sit down for a one-on-one meeting with President Xi in mid-March at Mar-a-Lago. That came from Kellyanne Conway. We've had comments from Trump himself saying that progress was being made at these talks, and now this suggestion that he could push back the deadline potentially to May the 1st, as you say, by 60 days. But there is a cautionary note here, and you alluded to this, which is if you have more time for these negotiations, then that is going to likely ramp up pressure on Trump and his negotiating team to extract real concessions from the Chinese. And that's where China watchers say you get down to the real rub. You can get some cosmetic changes around things like intellectual property and forced tech transfer, but where it comes to the state role in the economy, that is a much harder thing for the Chinese to sign up to. So that is the cautionary note as Mnuchin and Lighthizer continue these talks with Vice Premier Liu He in Beijing amid these positive sounds from the Trump administration.
And then, of course, we had the data this morning. This is the export numbers, unexpectedly rebounding in January. How much can you read into those, or the strength in those numbers, Tom?
Well, certainly well above the consensus. So you've got exports coming in up 9.1% versus a contraction that we saw in December of 4.4%. But also we had these seasonal effects. So you have manufacturers ramping up their production and their output ahead of the Chinese New Year, which sometimes closes factories in southern China for up to 3 weeks. So that has to be factored into these numbers. Imports came in dropping by about 1.5%. Quite significantly less than had been expected. And then the trade surplus as well came down to about 39 billion US dollars. So definitely seasonal factors have to be factored into these numbers. Going forward, the economists suggest that we spoke to that the pressure on China's trade picture is going to continue because of that overseas demand picture, a weakening in the overseas demand picture, and of course a weaker economy here in China, which means that domestic demand is also likely to be soft. So that is something to bear in mind as we look ahead, given the strength of these numbers this morning.